Hey, my name's James Thompson and welcome to this channel. Now in this video I'm going to talk about if the market does crash, should you buy your property today or should you wait until it crashes? Now this is a very interesting point and I've done some research on this and I'm going to give you some real world answers and show you why you might want to make the decision that I'm going to let you know very shortly. Now, if you're interested in property investing, then do join us on this journey together. I'm building my property portfolio and I'm taking you along on the ride with me. So you can join me, see all the good, the bad and property investing. You can see my portfolio that I'm building for my two daughters, Georgia, who's 21. We bought a property already, just about to complete our second, and Emily, who's just one. So take that finger of power, spin it round, smash that subscribe button and hit the bell notification. Now this video is really going to give you a great understanding about property investing. You see, I meet tons of people that are expecting the market to crash. Now, I don't know whether that's going to happen. You don't know whether that's going to happen. It's possible that if the interest rates keep going up, if inflation stays out of hand, that the interest rates will have to rise even more and then the market will start to come down. Now, speaking to brokers, I've been speaking to my brokers this week numerous times about lots of different deals that I'm doing at the moment, and I always get really nosy and just ask them what's going on in the market, and they are starting to see a slowdown. Same with estate agents as well. Not a crash or a correction, but a slowdown. So possible that it does crash. Now, let's look at if we were to buy now or if we were to wait. Now, the market last time it crashed was in 2008, and the crash was 15% on average. Now, some places they crashed significantly more, some places they crashed less. Some places recovered very quickly, some didn't. Now, the problem with the last crash was that people were able to borrow 100% of the value of their house. In fact, they were able to borrow as much as 120% of the value of the house. You see, the banks just assumed prices would keep going up as they have done for hundreds of years. Now, that meant that if you owned a property and you bought it for 100 grand, the bank would give you 110 grand, meaning you pocket the 10 grand to do a refurbishment or do shopping, whatever you wanted to do. As long as you paid it back, they were all okay. Now, the prices went down, and so a 100 grand house went down on average to 85,000, but you owed the bank 110 or 120 grand. You're in negative equity, right? Now they don't do that anymore. There's a lot of legislation and regulation around banking and stuff like that, and so they don't do that anymore. Now, let's look at what could happen today. So I'm going to use an example of some interest rates you can't get, but it's just easy numbers, right? So I'm going to use 2% and 4%, right? You were recently able to get a 2% mortgage, but you can't now. It's a little bit higher. I think I'm getting 2.8 or something like that. But let's just say 2%, right? So if you had a buy-to-let mortgage on 100 grand loan, so the house would be worth like 140 or something like that, you would pay back every year £2,000 in interest, which is £166 per month, right? £166 per month. Now, if you were to get 575 rent, which I've got a similar deal to this at the moment, so you've got 575 rent, you're going to have some fees out of that. You want to keep stuff aside for voids and things like that. So you're going to end up with maybe £300 profit off of that after all the fees and stuff like that that you get running a buy-to-let property. That's not too bad, right? Now, it would make logical sense that it could be good if the market crashed, right? But the market will crash as a result of the interest rates rising, meaning properties are not as affordable. I hope this makes sense, guys. I've not seen anyone explain it this way, and I hope I'm making total sense on this. If I am, take that finger of power, smash the like button, guys. That will really help me with my YouTube algorithm and get me some more views on this. Right, so let's look at the numbers. If we were to sell a house, buy a house for 70 grand, but the interest rates had doubled to 4%, right? So £70,000. And sorry, I'm checking on the Bank of England calculator here. Okay, so if we were to borrow £70,000 and the rate was 4%, the money that we would pay back in a year would be £2,800, right? Which is quite a lot of money. Your monthly payments would be $233, and at a 575 rent, which is probably what you would be looking at still, you would be making maybe £150 profit. So I think that there are pros and cons in any market. And a lot of people are sitting on the fence right now, praying that house prices go down because they feel that they're going to get a better deal. Now, my strategy that I teach, my strategy that I do is to buy and hold. I never want to sell any of the properties that I own because I feel that there's importance in keeping those and handing them down to my kids and their grandkids, and it creates generational wealth for my family in the future. And so I'm not too concerned if I buy at 70,000 or 100,000. What I'm more concerned about is what's my monthly profit from the rent. So whatever rent do I get after I pay my mortgage and all my other costs, what do I get left with? Regardless of whether I buy for 70 or 100, on a 10-year cycle, it's likely that even if it was 100, it dropped to 70, this will be the number that doubles every 10 years, and it will likely get to the £200,000 anyway, right? And so do you buy now? Do you wait for a crash? You don't need to massively worry about either of those. You need to look at, does the deal that you're buying stack up today? Is it a good value deal? Can you add some value to it? Can you create some equity in that property by refurbishing it, making it beautiful, adding a bedroom, adding an extension? Can you add value to it? If you can do that and you can buy at a fair price for both the seller and for you, then it's a great deal, and it doesn't matter if the market crashes or not. So should you buy now? Should you wait for a crash? The answer is do whatever fits with your strategy. But I'm telling you now, if the market does crash, don't just assume that it's going to be cheaper. In fact, a £70,000 house could be more expensive for you on a monthly basis than a £100,000 house. If you're buying to hold, then it doesn't matter if the market goes up or down temporarily, because when the cycle comes around, you're going to benefit from that house, on average doubling every 10 years. Now, I hope you found that useful or interesting, or maybe you've got some questions around that. So do question or comment below asking any questions, or let me know your opinion. Did you think that was a good video? Did you think it was useful? Anything like that would be really kind. Do go and check out my other videos on the channel, and come and join us at our live event we're going to be running very, very soon. I'm going to put a link in the description where you can join the VIP list to get a ticket as soon as they're out. Go and check out all the other videos on this channel right now, including this one right here.